Good afternoon, ladies and gentlemen. A very warm welcome to the session. I think it's a super packed show today. I'm Sachin Mittal. I lead telecom, media, and technology research at DBS Bank. And today we are going to talk about the uncertain world of the technology world. We are in the middle of 2022 already, and there's a lot of uncertainty about what's going to happen and what's going to not happen, in fact. And we decided to look at not 2022, but 2023, because 2022, things are so fluid that it's better to look at something which we can easily see from here on. And we have a esteemed panel of DBS, TNB Aura, and Momentum Works with us. This roundtable is a 1-hour roundtable. We'll be looking at each of our way of looking at data, how to filter the noise and get insights, and how to do the action on those insights. I'll invite the panel members to introduce themselves. Yeah.
So you want
Maybe Shantanu. Yeah.
Sure, thanks. Hi, I'm Shantanu. I head the coverage of digital economy group within the bank, within DBS Bank. And it is both from a corporate and investment banking perspective. So we look at opportunities to kind of help companies from their capital structure perspective, as well as start looking at lending to them from both a balance sheet as well as from a fund that we have set up specifically to support the digital economy group. So that's me. Thanks.
All right.
Jana?
Hi, my name is Zhang Gan. I'm the CEO of Momentum Works. Momentum Works is a Singapore headquartered venture outfit where we focus on enabling the digital economy in emerging markets. So with a particular focus on Southeast Asia. So we have done venture building, and we have an insights arm. We also have an academy arm. So for the past 2 years, we've been doing quite a bit of research about the digital economy in Southeast Asia. And hopefully that will be some useful sharing during this session.
Hi, everyone. My name is Joe. I'm currently principal of TNB Aura. So we are a Singapore headquartered venture capital firm focusing on investing into early stage tech startups across Southeast Asia. And I'm very glad to be here, and also thanks DBS for inviting us, and look forward to have a fruitful discussion with all the experts here.
Thanks, Joe. Thanks, everyone. OK, let's address the elephant in the room. So last 4 years, in fact, I will call last 4 to 5 years, Uber and Netflix became a verb. And disruption was the most often word, right? Most often used word. And that changed suddenly this year. Today, we hear about lack of profits, profitable business model. And investors have a shift in their mindsets. So what do you think, in your opinion, how do you see this shift? How are banks, how are investors going to assess this landscape, how to assess the investments? Maybe you can start with Changan. Yeah.
Thanks, Sachin. I remember back in 2016, I was at the session organized by a few investors and with lots of investors attending. And back then, the message was winter is coming. We need to look at business fundamentals. Then we all know what happened between 2017 to 2020. Lots of investments happened in Southeast Asia. And the market became much richer compared to 5 years ago. And of course, the last 2 years with the pandemic, things became a little bit hard to understand, to be honest, because there was lots of capital, and there were lots of startups. And there were also lots of messages, lots of noise about whether the pandemic is accelerating or hindering particular sectors. Now we are in 2022, and the market sentiment suddenly became kind of negative, very bearish. Of course, there's lots of factors, macro and micro, impacting what we see. But I am kind of optimistic for a number of reasons. First, if you look at the infrastructure, for the last few years, and all this investment built a lot of infrastructure in terms of payment, in terms of logistics, also in terms of talent and education of consumers. And second, we really see lots of capital, I mean, by Joe and the others, lurking on the side, looking for good investment opportunities. So I'm kind of optimistic about the next 2 years.
Shant?
Sure. I mean, from a bank's perspective, we all look at it from a much longer term view. I would say we have seen this situation in 2000, we have seen this situation in 2008, we are seeing it again. And with each cycle, it's an obvious situation where unless there is a lot of innovation that happens, and then there is a period when those profitable models get filtered out from those innovation. And we are just seeing the same thing happening now. So tactically, from the short-term perspective, we see opportunities, I would say, where for some good companies who would be looking at anti-dilutive options at this point, it's a good opportunity for some of the banks to step in with structured debt solutions, because this is the time when they are potentially looking at the option of either having to do a down round or, you know, pretty much fold the things. So there are good business models where that, and in the longer term, we do see that there is still some value adding or sort of innovative business models come out. So it gives us an opportunity to now nurture those, see how we can come close to them and, you know, take a longer term view on those businesses.
Okay, sure.
Yeah, yeah. Of course, I agree with Zhenggen and Shantanu, right? So based on early stage tech investors' perspective, we definitely see the public market has been down from all-time high by a lot, right? And I think from our observation, there were a lot of kind of, I would say, suspicions or uncertainty of our Southeast Asia companies going public, right? Like, for example, the recent Grab listing, and we can see the performance, right? But actually, this is not for just Southeast Asia startups. Actually, this happens on a global scale on across all the sectors, right? Just maybe we just go back 2 years ago, we still can recall SEA was actually outperforming a lot of the global tech peers, right? So for a VC's perspective, because our fund life is typically 8 to 10 years, and our investment holding period is about 4 to 6 years. So what we are looking at is really the long-term sustainability of the business model and also the micro of Southeast Asia market, right? So based on our research, if you look at global regionally, I think only if you think about a region that has a large population, a strong momentum of economic development, and also a high rate of technology penetration and adoption, there are only a few, right? China, India, Southeast Asia. And China has its own challenge to face recently. And also, actually, that relatively Southeast Asia is becoming a more attractive place for both investors and also talents, right? Looking into the market. So from our perspective, we are still bullish, but we are also cautious about the business model, the unit economics of the model itself. Yeah.
Okay, sure. So as you guys pointed out, there's a slowdown in funding rounds, there's a slowdown in IPOs, and the focus has shifted from grow at all costs to sustainable growth with focus on ROI. So as such, what are the trends you are seeing in the fast-growing e-commerce sector in our region? Yeah, let's start with Shantanu.
Sure. So again, I mean, we'd like to bring a little bit of context back to that fast-growing point. I mean, it was a situation of, I would say, the tail wagging the dog a little bit, because there was an oversupply. And so people, whoever needed to raise $100 million, they were being made offers of, you know, 200, 300 million. And so there were a perverse incentive on both sides to increase the valuations and all. And that's what has happened, and that has now been corrected because of purely the rising interest rate environment. So in the fast-growing e-commerce segment, it's in the overall context, if we look at it, it's still people are now saying, okay, instead of chasing growth, I have to chase profitability. But that was always there in their mind. It was just to keep pace with the sort of valuation expectations that they were potentially looking at, higher growth and compromising the profitability. So there is a conscious move now to dial down. So what the implication for that, I would say, is the businesses which have reached the scale can quickly turn a lever from that growth to the profitability. Businesses which are subscale will find it incrementally challenging. And those are the guys who are going to be impacted. And more so in e-commerce, because that's a business which sort of runs on scale. Without scale, it's basically moving from one way of distributing a product and a solution from a old economy method to a new economy method. So scale is a fundamental differentiator in e-commerce. So people who have reached scale will be able to do that. Now, what does that mean? That means that the top few in each market, depending on the size of the market, will be there in a position where they can scale. I would like to stop there and maybe,
Maybe, Joe, you want to contribute? Yeah.
Yeah, sure. I think we need to be very cautious about high growth, especially in this kind of market condition, right? So I think for us, because we launched our first fund back in 2017, and at the time, actually, a lot of the, I would say, the e-commerce 1.0 models, for example, Lazada, Shopee, Tokopedia, are very large. They are already in the unicorn stage. So there was no chance for us to invest into another company to compete with them. So we took a different approach. So basically, we do a lot of study on the successful business models that happened in other markets, which are more similar to Southeast Asia, for example, China, India. And then within the e-commerce space, we found actually social commerce is probably the second largest sector within e-commerce industry. So we took a deeper look into it, and then we actually found the investment target in Indonesia. But actually, to be honest, e-commerce, maybe to many people, is the most common model that people are familiar with. But actually, it's a very complex model because you need to solve a lot of the problem to make sure you can be profitable. For example, you need to take care of the supply chain. You need to build logistic infrastructures, payment infrastructures, right? So for us, we really took the learnings from other markets and look at Southeast Asia, how to localize the model and apply the model here, and also at the same time to be profitable, right? So I think a few points. First thing, we look at non-first tier cities, because a lot of the e-commerce marketplace, their main GMV were coming from first tier cities, which is super competitive. And then we also look at if there's an efficient way to solve the logistics cost, because last mile fulfillment is a very painful problem for all the e-commerce players. So by leveraging social commerce model via, for example, community leaders to collect the order, maintain the relationship with the end consumer, and also do the last mile delivery on behalf of the platform, is super efficient and working well in Indonesia, right? So that's the kind of the TC. So I would say for Southeast Asia, if you want to identify high growth, but at the same time a sustainable business model, you need to basically find what's missing in the market and what you can build at a low cost.
Chang'an, any views you have?
I was speaking with the founder of one of the e-commerce companies, which has recently executed a layoff. I was speaking with him like 2 years ago. I said, your way of development, your way of growth doesn't seem to be sustainable. There's lots of redundancies. There's lots of inefficiencies in your business model. And his take was, well, I don't have a choice because everyone's pushing me for growth.
Yeah.
I understand these problems, but I don't have a room to breathe to solve these problems. And I haven't talked to him after the layoffs a couple of weeks ago, but it seems that he has found that room to look at the business and to really make things more efficient. So I think in that way it's beneficial. Also, when we look at e-commerce as a whole, I remember the early days when I was still with the Rocket Internet back in 2015. We had a sister company called Lazada, and they couldn't. The many things they wanted to do, they couldn't do. There was no logistics; they had to build their own logistics. There was no payment; they had to build their own payment. But now, I mean, you see, lots of things became possible. Of course, logistics is still not as ideal as we would want to see. But when you go to at least the capital cities, or in certain cases, second-tier cities, things are there. We have the new players coming in, like TikTok, which came in. They don't have to build their own logistics. There is infrastructure there. There's talent there. So I think at the moment you really see a richness of different models coming out, and not everyone has to compete on slashing prices, flash sales. I mean, people have the ability to build their own business models. But of course, that's in theory. And in practice, there's a lot of work for people to do to manage their investors, to manage their internal employees, and also to really make their business models attractive to their customers. So lots of work, but I think room to breathe.
Another point, maybe just to add, what we are seeing is that there was a tendency because of this growth when you could count your GMV, you could count the payment from the wallet that is happening to buy the same product. There was a tendency to become super app. Yeah. And now there is a bit of a reality check. And, you know, people are saying that each of the services, whether it's logistics, whether it's payments, there is a critical mass needed in those particular businesses. And there, in some instances, we are seeing real examples of people getting out of that super app mindset and saying, let the payment ecosystem evolve on its own, let the last mile logistics evolve on its own, and let the intercity logistics become a separate player. So there is a focus towards core strengths, and this is sort of another, I would say, we will see some evolution on that. And there, you will see some of these enablers of that overall ecosystem for e-commerce start consolidating around a particular theme. People who are good at logistics, there will be a consolidation and aggregation in that. People who are just good at maintaining the ERP and getting smaller merchants onto that platform, there will be a sort of consolidation. And we will also see some, like maybe China, which is my 5 to 7 years ahead, a lot of organic brands will start emerging in this part of the world, which will become strengthened. So these are some of the things which will happen because of people's focus around profitability.
Interesting, because there is a shift from the super app mindset. I can do everything. Yeah. And now the focus is don't let expert do the job. So all three of you are from different backgrounds, and you are from a venture capitalist, you are from a venture output, and you are from a bank. How do you assess the survivors and the thrivers, from your own methodology, and how would you support as a venture capitalist, many of these, I would say, distressed firms during these turbulent times? Yeah. Let's start with Joe, maybe.
Sure. Thanks, Sachin. That's a very good question. We got asked a lot by our investors, by our peers in the market as well. So if you think about our investment process, right? So it basically involves investment, portfolio management, and eventually exit, right? And then I think with the market maturing in Southeast Asia, we now starting to see a lot more ways to exit, and also number of exits happening. Although in this market condition, it's not optimal, but we still see different ways and how the later stage investor and also public market see Southeast Asia tech business, right? So we almost need to do a kind of a reverse engineering from the exit back to pre-IPO round, back to growth equity round, then to our early stage round, right? So how to attract the investor at each stage to continue support the business, right? But it's very difficult to predict the future. So what we did is we developed this thing called unicorn methodology. So we actually, first of all, we compare Southeast Asian market with a few other more developed markets, actually including US, China, India. But eventually, we found actually Southeast Asia is the most similar to China about 7 to 10 years ago by the economic development, by the digital penetration, consumer behaviors, and demographics. And one interesting fact is that China went through the internet era, PC internet era, and then onto mobile internet era, which happened around 2019 and 2010. So Southeast Asia actually leapfrog. Southeast Asia never went through like real PC internet era and then jumped straight into mobile internet era because of the smartphone penetration. So there were a lot of similarities to China, so we took a deeper look at kind of the golden era of VCs and startups back in China. And we basically research and study all the successful models that reached unicorn status or successful listed in Chinese market or NASDAQ. And then we identify the biggest industry and also identify the models which are very applicable to Southeast Asia. And then after that, with that knowledge, we start to talking to the founders and startups in this region and try to identify the potential winning team to back, right? So this is the kind of the way for to get us educated and also get a better sense what could happen and what could grow in a very large scale in the future. Yeah.
How would the bank look differently?
I mean, I would think that Joe is perhaps looking at it at a much earlier stage. Honestly, as a bank, if I have to start looking at from a point of balance sheet exposure to that, what matters to me and the way we have set up, at least in a bank, is to look at it at a stage where at least there is acceptability of its product or service or solution in the market. So that's proven by some sort of a scale of revenue. Let's say we put it at anywhere between $25 to $50 million of top line real revenue. We at least have taken a very disciplined approach of not looking at GMVs and all. We look at real revenue. And then the unit economics has to be positive. And then we say, okay, if we look into that particular segment, what is it that they're doing well or not doing so well compared to that peer group where they are operating? And that's when we start thinking, okay, this is where they have at least a proven kind of track record, and that will only be possible if someone like Joe and others have already put in equity money. Then we come in with a little bit of cautious approach because we are ultimately dealing with public money. So we come in with structured debt solutions at that stage. But fortunately, we are still trying to do something for companies which are still EBITDA negative, but at a certain scale. So that's how we are looking at it. And that automatically creates a filter that there has to be at least unit economics profitability. It should not be that at the gross contribution level, the businesses are negative. And peeling the onion and arriving at the right gross contribution is something that we are trying to do correctly and not looking at what is being presented, because there are a lot of issues around the numbers.
These VC is looking at a long-term picture. He's looking at revenue, real revenue. What are you looking at, Jangan?
I've come from an operator background, so I've built companies, shut down companies, executed layoffs, and successfully exit one company, thank God. So I've seen a lot of sort of operational issues and a lot of friction in the market. So every company that goes to fundraising after Series A or from Series A would present financial projections, and it all makes sense. But the question is that, I mean, how do you actually make things happen? How do you get into the market at the right time and pace yourself according to the development of the market? So for the past 2 years, while we were stuck in the pandemic, I've worked with Professor Chen of Strategy of INSEAD on a book called Seen Unseen, Behind Chinese Tech Giants Global Venturing. So we studied like 20 plus Chinese companies. How did they actually get successful, tech companies, and what are the challenges they face outside China? So essentially for sectors which make sense, which company will become successful? So our thesis is that it comes down to a few key elements. First is the leadership. Second is the people. I mean, what kind of key people you have. Third is the organization, because we see lots of companies, initial growth stage, very good, but as the organization becomes complex, I mean, how do you ride this organization? How do you keep growing this organization becomes a challenge. And then the last is product. So when people look at product, okay, is your product better than the others? It's really a reflection of all the factors above. That said, it's extremely difficult to predict which companies will eventually become successful. So what we have done is, because we have equity stake in some companies as well, keep that learning feedback loop and learning curve. So constantly challenging what we have believed, talk to lots of people like you guys, and really keep evolving our thesis about companies, about the future.
Got it. Essentially, I think tech bubble, or let's say whatever tech valuation we are seeing, eventually, it's a matter of time. We'll see some recovery. But at the same time, we are seeing a rise of Web3. For some people, crypto route or what you call it is like, it's a hype. It's a bubble which has burst. And for some people, it's a new innovation which has long legs. So what is your opinion on this Web3, and how would you look at Web3 from your perspective? Anyone of you who wants to jump in who's the most bullish on Web3?
I don't know. Any of you want to go first?
Yeah. You want to go first, Joe?
Yeah. Sure. I can start first. I mean, I personally invested something into Web3 space just to want to participate and see what's happening. But at the fund level, we invested into a crypto exchange called ZMax. Which is, I wouldn't say it's real Web3 because it's just an exchange business, but it's just help people trade cryptocurrencies, right? It's not very different, business model-wise, it's not very different from any other stock exchange, right? But because of that investment, we actually had a bit more research into the Web3 space. But as a fund, due to the limitation of our investment mandate, we only can invest into a limited number of business models, and we can only invest into equity instead of tokens, right? So we were mainly looking into a few models. One is actually already collapsed recently, which is the stable coin. So we are not touching that. And the second model is basically the infrastructure layer. Because we were thinking about Web3, of course, very cautiously, but also comparing it to Web2, basically the internet companies 20 years ago, right? So actually, there were a lot of noise in the market, a lot of different projects. There was a bubble in early 2000 as well in the tech space. But there is a huge lack of infrastructure, software, tools for the people who want to build any products in this space, right? So that's another model we are looking at. And the third one is kind of a combination of, I would say, internet space and blockchain space, which is GameFi. Because gaming companies, they have been around for a very long time, and also it's a huge market. And a lot of companies are just leveraging on the blockchain technology to kind of first to attract a lot of young users in an efficient way, and then also trying to solve a lot of the gaming in-game economics, which might be more preferable to the users, but it's still a very early. I would say the industry is still very early, so you need to almost need to look at it from separate the technology and the business model. I would say the technology has its own innovation, but it really depends how people are really building something on it or taking advantage on it, right? So it's still pretty early, so we are just doing our research and observe the market at the moment.
Yeah, so I think Web3 is still a topic many people are not convinced about. I mean, I wanted to hear even more concrete views from you on Web3, but you are also even cautious, right? You are also a bit cautious on Web3. Okay. Chang'an, what do you have on Web3?
So every day I have like two or three discussions about Web3, because this is what everyone's talking about, and of course there's all the noise, right? I mean, this week you have a few pretty shocking news coming out of established Web3 investors, maybe Imperial. So we actually take it quite seriously from our end. We literally hired a new astrophysicist to lead our Web3 research. So we just try to understand what is going on. We have some preliminary results, and in the sense, after all these discussions, after sort of small experiments with cryptocurrency, etc., so is that I sort of agree with Joe that we're at very early stage of Web3, but the current round of sort of a price slide compared to 2018 is quite different, because 2018, I mean, aside from cryptocurrency, there was nothing else. So when it slides, the market goes into winter. But now you have NFTs, which in my opinion could be very interesting, because it authenticates ownership of digital assets, and maybe in the future physical assets. But at the moment, the amount of the amount of digital assets that exist are very small. So you can't have that many real applications which are not speculative. But what would happen, I mean, say in 5-10 years time, if more people are comfortable with digital assets? I mean, now we have lots of like very young kids in our office. I mean, the youngest intern was born in 2003. And the way they look at digital assets is very different from the way we look at digital assets. So maybe there's a generational shift there. I mean, how do we leverage that? I think the best thing is just really to understand what's going on, to understand the underlying technologies, to look at what is really happening, and form your own opinion. At least if there's something coming in the next few years, you're not left behind. But at this stage, where we are now, nobody's late. It's still very early stage.
There's no FOMO, right? So
yeah,
I mean, NFTs have a lot of problems, counterfeit NFTs. And normal man can't understand Web3. That's why you hired an astrophysicist.
I mean, the reason about physicists is that I mean, throughout the career, she was basically focusing on disproving things. So hypothesis disproved. Hypothesis disproved. So we run a lot of iterations, discussions about different business models. I mean, we're not always right. In fact, probably 80% of the time, or not even 90% of the time, we're wrong. But our understanding about this sector grows, I mean, day by day. So hopefully we can sort of find something interesting there.
Yeah.
We'll keep you posted.
No, I mean, it's comforting that from a VC and a research house, they are not feeling FOMO. So banks typically come in pretty late. So I'm very comforted that if they are not feeling the FOMO, that when we are. But from our perspective, I think at least this is where I'm coming in more from a personal point of view, that on Web3, we will see a gradual development, and it will not be like, people will make a quantum jump into a multiverse or a metaverse or something. There will be efforts to develop a particular community, particular solution. We have a business which we are currently banking, whose whole idea is to kind of allow authors to create NFTs and then communities around that, and then people will be sort of trading in tokens and all of that. So, but then there are others which are purely looking at a metaverse for a certain thematic content, whether it's around music, whether it's around travel. But our idea is perhaps through these efforts, we will see some of development like what Joe was mentioning, some of the underlying technologies which will be more enabling these kind of things. And I would like to draw a bit of parallel between that and potentially 5G. 5G is something that we have been talking about for the last 6 years. The technology has been there for maybe almost last 3 or 4 years, but still the application layers have not developed. So the deployment is still happening now. And finally, we would see certain deployment, but still people are trying to figure out that if autonomous cars are not there, if autonomous run factories are not there, how will 5G be really useful? I mean, if I take about 120 seconds to download a movie, and if that I download in 6 seconds, is my life really improved? Because I cannot still watch the 1.5 hour movie in 7 seconds or 120 seconds anyway. So that's where I think some of these emergence will enable technologies which will underline, which will help, and then we will see emergence of thematic applications around Web3. There will be something around travel. Then the first port of call is, of course, the gaming environment, where we will see that. And as a bank, we are just keeping as close to the ecosystem as it's possible. We might even take some sort of small steps towards registering a presence in some metaverse. But this is just from, dipstick approach and have a look and feel and not feel antiquated when things start moving fast. But it gives me comfort that these guys are not feeling FOMO.
Yeah, okay. That's comforting, that's comforting.
Can I tell a story? So earlier this week, I was having discussion with a friend of mine coming to Singapore from Vietnam. So the borders have opened, right? So he told me that in 2018, he was presented an investment opportunity, which he passed. That could have bet him $200 million from 100,000. The company was called Sky Mavis, and the game was called Axie Infinity. I asked him, how do you feel about that? And he said, well, for the past two years, I've been reading white papers. So I don't regret missing that opportunity, but what it has taught me is that there are lots of like startups doing different things. And if you see that people are trying to address a genuine problem with the solution that's a little bit weird, I take a little bit more sort of patience to try to really understand where they're coming from. So he said, really the episode taught him to be humble and to be curious. I think that should be our attitude towards Web3, 5G, because many of these things, as you have pointed out, right, are enabling technologies.
Yeah.
But the real use cases will only happen later.
Yeah.
And we should keep an open mind.
Yeah, so I agree. I think Web3 has some important concepts like smart contracts, so which will probably become part of the mainstream. But probably the whole Web3 has to evolve first.
Of course.
Yeah. Okay. Interesting discussion. We have now time for question and answer session. So participants, you can actually type your questions on the screen, and if you don't have any questions, you can actually vote for the questions which you like they should be asked. Yeah. So we'll wait for a couple of seconds so you can type your questions. Yeah. So in the interest of time, what I'll do, I have a question which you can see on the screen. And the question is, in the e-commerce space, we are seeing duopoly or monopoly of the marketplaces in many countries compared to earlier, which is too many players, what will be the impact on the e-commerce enablers because of this duopoly monopoly? Shantanu, yeah?
Sure, I will have a stab at it and maybe. So as I was mentioning earlier, because of what we are seeing, that there's a focus to profitability and people are trying to realize that, okay, being super apps is not the end game, these enablers will emerge and they will sort of focus on certain core areas. So we will see some enablers who are primarily focused around cross-border play. There will be certain who would be purely focused around, improving the ROI for any kind of promotional or marketing activities. There will be then some of these who would be purely focused around enabling the cross-border logistics part, which will be their core area. And within that space, we will see consolidation happening, because even today, there are players who are doing out of these 5, 6, 7 activities, some of them are doing maybe all of them. They will try to spin off, and there will be emergence of some of these enablers who would be catering to all kinds of cross-border merchants between China and Southeast Asia. Some enablers will be purely focused around improving the ROI of marketing events, and they will consolidate. So that's my view in terms of what will happen, maybe.
So no one player doing all the activities?
I don't see that. Increasingly, I see that people will start focusing on the core and not try to do everything. And then there will be another layer, which is the ERP, which will be the sort of enabler of the enablers, who will be the software SaaS providers, which will be basically enabling these guys.
Got it. Yeah. Anything, or should we move to the next question?
I think so. You want to go ahead?
Yeah, I would just make a quick kind of prediction. I think we won't see, I would say the impact to the enablers will not be the same as what we have seen, for example, in the US with Amazon becoming the monopoly, right? They are basically trying to do everything, fulfillment by Amazon model, Amazon Pay, right? But Amazon can't really penetrate Southeast Asia market, because actually Southeast Asia is a very complex market. And Southeast Asia has a lot of market depth in different level. For example, Singapore is a very developed country, but small population. But Indonesia has a larger population, right? But less developed. So actually we see a lot of different models could happen in Southeast Asia, and also because of the local regulatory, the local network, it's very difficult for a large marketplace to do everything by themselves, which actually we discussed earlier, right? So I would say there will be players, enablers, focusing and be the best in a very specific area. For example, logistics, cross-border payments, right? Instead of like a super marketplace kind of model. Yeah.
Okay.
I think when Shopee and Lazada started building their own logistics, there was lots of concern saying that, hey, are they going to eat everybody else alive? And I think at the end of the day, so these guys are all part of the same value chain, of e-commerce value chain. And of course, if you have just two marketplaces or two demand originators compared to many, the negotiation power is probably higher on their side. But that said, I mean, the e-commerce we look at now is much richer compared to 5 to 6 years ago. So, I mean, again, we mentioned that when TikTok came, they could find logistic players to work with them, and that there are agencies which help sellers, because now there are many more sellers compared to 5 years ago on e-commerce, and it's a very rich support ecosystem at the moment, and also at the end of the day, so platforms can do everything themselves, but does it make sense for them to do everything themselves? So especially in the current landscape, they probably have thought hard about this question. So at the end of the day, I think there's room for the enablers in different spaces, and also as Shantanu mentioned, what we're really looking forward to see is all these new brands that's coming up because of the infrastructure that's available, and in the case of Singapore, Malaysia, Philippines, and I think to a certain extent Thailand, you see lots of people creating brands, selling things on Facebook. Facebook, unlike TikTok, they don't close the loop. So they are enablers. There are third-party sort of service providers. There are even SaaS software to help people selling on Facebook. So that creates its own ecosystem. The question is that would you see like multi-billion-dollar companies coming out of that, or would you see a bunch of $100 billion companies really become really good in their respective areas? So I think it's an interesting space to see.
Yeah, well, I think you led to the next question, which actually is about the next unicorn, right? So the question is, wait, can you see the, okay. We have seen the rise of Grab, Gojek, Tokopedia, and so on. Which sector or type of company will be the next unicorn of the next decade?
Wow.
Next unicorn of next decade. Yeah. So next, I think VC firm has to take a longer term outlook, right? Next decade, right?
Yeah.
That's the word.
Yeah. To be honest, I hope all of our portfolio companies become unicorns in the next 10 years.
Yeah.
But I would say it's really, I already say it's very hard to predict the futures, especially Southeast Asia is a very different landscape versus, although we try to find similarities versus other markets, but Southeast Asia itself is very different. I would say probably since we are talking about e-commerce a lot, I do see two models could become unicorn level in the next 5 to 10 years. One is definitely social commerce, who are really focusing on second-tier cities, lower-tier city, and rural area, because that is a very large untapped market. So the market size is big enough. And the second model I have been observing is there are a lot of opportunities for brands, right? But we thought about it and also talked to a lot of the direct-to-consumer brands, especially. Individual brand is very difficult to scale to a unicorn scale. So we also took learnings from what happened in the US, a company called Thrasio, and also recently Indian startup called Mensa brand. They became unicorn really fast because they adopt a concept of house of brand. So they acquire or they invest into multiple new age brands and then consolidate them together. But at the same time, at the back end, build a lot of, for example, the inventory system, logistics, and also the technology platform to enable those brands to grow, right? So a house of brand probably can make it to a unicorn level. Yeah, so those are the two models within e-commerce I foresee. Yeah.
Oh, this is new for me, house of brands.
Yeah, no, we are also coming across a lot of these opportunities because their proposition is that unlike unprofitable growth, we are identifying brands and who are already scaled up, and they are trying to acquire them when they look at the gross margins and everything, and they say this model lends itself to leverage. So you guys provide us leverage instead of raising a lot of equity. We want to borrow because we are buying profitable brands who have scaled up on a platform like Flipkart, on Amazon India, or in Southeast Asia, in Lazada and all. So I kind of agree that that could be one area. And then, of course, the areas that we haven't touched yet are, there could be some unicorns in the health tech or the tertiary health tech space. We had already seen one here in Singapore, which was a NUS kind of a startup, which has become unicorn, and then the other one. So because of what's happening all around us in terms of the global warming and the impact on that in terms of health and all, we will see certain healthcare-related unicorns in this part of the world, and maybe they will be even bigger than unicorns.
Okay.
Let me add a point. So, over the past 4 months, like every day, we have 2 or 3 Chinese investors reaching out to us because of the macro landscape in China. Many of them are shifting their attention to Southeast Asia, and everybody asked the same question. We want to find out which are the 3 hottest sectors in Southeast Asia where there will be lots of unicorns. And we know one is Web3. What are the other 2? And we always ask them back, what do you think are the other 2? And it's interesting that we get lots of perspectives based on what they have seen in China. But the consensus is that just as my friend from Vietnam said, right? If you see a business model that's a little bit weird, look more deeply into that. So I think the market has evolved into an area where Grab, Sea, GoTo, etc. they occupy the multi-billion-dollar space, and what comes a layer below probably might not come from the areas where there's consensus, where everybody expects it to be unicorn level. I think you mentioned about health tech, and I've not heard many people talk about this. Maybe that's an area where you see interesting companies being built to unicorn level.
Yeah.
Okay. So I think the next question is, okay, this is answered. So next question is not really on the next decade. I think it's looking like the next couple of years. And the question is, which subsector in the tech industry do you think will be most impacted? I think it's not clear, impacted positively or negatively in the next couple of years, given the current market sentiment. So I think the question is open, so we can talk about both sides, good and bad, which will be impacted over the next couple of years. Yeah. Chenghan, you want to start?
Wow. That's a big question. Probably it's difficult for me to predict the exact sector, because otherwise I would raise a fund and invest all in that sector. But a general methodology to look at the future, to see how we can really sort of make our investment horizon more, the focus more precise, right? I would think that in any market, when you look at all the startups that are coming to you, or the startups you look in the market, 90% of them will probably not make it. But amongst this 90%, probably more than half of them are built on business models which will never generate positive ROI. So I think now we are in a market where people do not rush into investment companies just because capital is cheap. So you have the room to look at which companies really should not be there. Really not generating the positive ROI. Really the founders can't explain their business models clearly. But in bull market they can raise money. But now it's difficult. So some of the noise is naturally filtered out by the market. But if you want to look at the sectors which are sort of positively impacted, I do think that some investors are forced to look harder into business models which previously nobody looks at, and health tech, and I think in Singapore there's lots of researchers who have IPs which can be commercialized. I know in the past there have been a few waves of investments, but really, as people started looking for more niche solutions, more niche technologies, more niche business models, maybe some of them will get more attention.
Yeah. Well, yeah. Actually, it looks like niche businesses will evolve from here, because if those businesses are more profitable rather than broad-based, very huge scale businesses. What's your take on that, Joe, on this impact?
Yeah. Actually, this is a big question to answer, to be honest.
This is $1 million question, because
for this question.
Yeah.
The job is to answer this question.
I think instead of commenting on a specific sector, which could be controversial, I would say because of the market condition, right? So actually, I see the whole tech ecosystem in Southeast Asia is like an evolving maybe like a person, right? Because previously people were solving the funding gap in B, C, D, and now once we more company hit IPO and then suddenly see the market public market doesn't really agree with the private valuations. Actually, this feedback to the investor and the founders in early stage, right? And then so I think people are now more cautious on the burn to grow models. Founders and investors are looking at strong unit economics, strong product market fit, and also look at your acquisition cost and retention of your customer in the long term a bit more. So I would say a lot of the founders, investor will get educated, and also the companies who doesn't have a sustainable business model will disappear in the next few years. So what's remain will be a more solid business in the next few years. But still, sector-wise, I still want to say one or two that I see like normal tech investor doesn't seem them as a sexy business, which is, for example, agri-tech, right? So a lot of the more traditional sectors, they also need digitization. If you are able to do digitization, improve your business model to more modern way of operating it, leveraging on technology, it actually can unleash a huge potential, right? So agri-tech is definitely one of the big industry that is untapped before, yeah.
Okay, so yeah, I think health was one, agri-tech is another one. Shantanu, your take?
No, I would like to sort of echo their comments. It's going to be more focused around, so what I'll say is, in the recent past, you could see certain business models where you would intuitively feel that this is not going to create a massive value add. I mean, does it really solve a meaningful problem? There were businesses which were re-articulating a problem which would be this much to be a this big problem, and hence we are solving it. You know, this is happening, and that will, so certain businesses, certain tech models which were emerging on the back of certain creative businesses, like architecture, like painting and all of those things and all, which were sort of being said, okay, this is a platform which will help solve this and all. Then you realize that there is a fundamental difference in those, because there's a large amount of human touch needed in that. To move that to tech platform, I mean, you are basically amplifying a problem to find a solution, and you were able to get away with it. Those things will be sieved out. But at the same time, there will be increased focus on, as Joe was pointing out, to agri-tech, to health tech, and also certain areas where you know, even in insurance and all, we will see some disruption in terms of how products are developed and designed, because there will always be certain products which will have a, you know, much longer buyer sort of intimacy in kind of buying, in the buying decision, but there will be some where you will see product innovation. So I think those are some of the, but I largely agree with them.
Got it, got it. This next question is on Web3. There are a lot of definitions of Web3. How do we tune out the noise and get real meaningful insights? And actually, along with this question is also a question on crypto. Crypto is declining. Who will be the biggest beneficiary? You know, so if you can combine these two questions into one, try to answer, you know, each one of us, yeah.
Why don't you go first? Because on Web3, from a research perspective, you would have some insights. I would like to hear your.
I mean, my view is simple, that Web3 is a technology. We haven't seen successful business models in Web3 so far. You know, some concepts of Web3, such as smart contracts, they might switch over or go from Web3 to the mainstream Web2 world. I think that's already happening. And there's a valid point that some of the technology is maturing over there. But the rest of the Web3, we are not so confident. And rest of the Web3, what I mean is a decentralized, right? And I think there is a lot of issue that VCs have captured 80% of the Web3 services, right? So 80% of the Web3 services are already owned by VCs. So I think VCs are best positioned to answer this question on Web3.
Sure. Yeah, actually, there's because this is such a new space. I have heard probably a dozen of different definitions of Web3. I think the most consensus way to define it is basically looking at Web 1, Web 2, and Web 3. So Web 1 is basically the first wave of, for example, a blog space that you can only post information. And Web 2 is basically all the biggest tech companies that has built on Facebook, Google, that you can actually interact with the platform. But it's a lot of the information is controlled by a company, right? So Web3 is basically taking that, but they try to decentralize it over blockchain, right? So that is the most consensus way of the definition I've seen. To answer who has been the most beneficiary in the recent crypto market crash, I would say anyone that is not in crypto, definitely, or anyone, probably some hedge fund who is shorting the market, yeah.
Very quickly, our astrophysicist has led a team to produce a Web3 report that's available on our website, so you can go and download. I think we give a pretty precise definition.
Okay. Okay, interesting discussion. I think a good discussion about next unicorns in agri-tech, health tech. We did talk about some problems being too small, but amplified by entrepreneurs. So thank you very much for this interesting discussion to our esteemed panelists. And for the audience, thank you for your participation. You can actually give us feedback. There is a link for us to know what you like about this session, what you didn't like, so that we don't repeat that next time. Thank you very much for your time. Yep.
Thank you.
Bye-bye.
Thank you.
Yeah, thank you.